GammaEdge. Today is Friday, the 29th of April. It is the end of the month. Good. Let's get started. The fine print. Everyone pause this, read it. Important to you, important to us. When you get done, go ahead and continue on. Overall, taking a look at the SPX and the major ETFs, somewhat of a bearish picture, not strong either way. We're really pushing kind of both directions here. On the SPX, we did see just a slight increase in the net negative gamma. We also saw a slight increase on the positive side. So not that they're neutralizing necessarily, but just be aware it's kind of a mixed picture, not very strong. The SPY relative to yesterday, a little bit of strength on the negative side, nothing really happening on the call side. So we're gonna color this flat or mixed. Just be aware, not strong. The Qs, more or less the same thing. Excuse me, more or less the same thing here. A little bit of strength on the negative side where we've got some puts. Looks like negative gamma coming in. For both the Qs and IWM. Note it's relatively flat on the call side, just no demand for the upside here. So we are fairly well protected to the downside, a lot of puts in place, etc. So across the board, just bias is somewhat downward. Looking at the near-term expiries, best way to characterize it is that we're weak. Even though we're in a net negative gamma condition, you can see that from the red lines here. We're very close to the zeros, not necessarily here in IWM, but here certainly in the SPY and the Qs, and you can see that the gamma is actually decreasing here in the SPX. For many of these, we're between the goalposts or between some pretty dominant levels here. Just want to call those out. Make sure you study those. You can run this with the $E command in the Discord. I'll give you some key levels there. Also highlighted just what we would think would be some major transition areas, but for the most part, consider things weak. Taking a look at the history, you can see we've had this downward bias. We're below the zeros across the board. When we're below the zeros across the board, we typically are moving down. Note that a drop of negative gamma in the short term actually is correlated in back testing to actually a slight advance upward, but given the downward pressures and just given the heavy protection that we have to the downside, we're not putting a lot of faith in moving up aggressively. Excuse me there. Wow. It is Friday. Taking a look at the flow summary, across the board, I would just call it bearish. The afternoon session, even though price advanced across the board in the major ETFs, we actually saw quite a bit of calls being closed, puts being added, calls being closed. The puts were added earlier, and then we kind of did a bunch of gyrations as rolls were taking place. Here on IWM, you can see where the puts were added and almost net flat for the calls on the day. Overall, the net algo from TradyTicks indicates negative bias, and so just be aware of that. Taking a look at the market model, frankly, I like to see an intraday reversal like we saw yesterday. That's good. Very strong push. No question that that's good. Ending the day on the high of the day, it was flat into the close, so there wasn't a lot of demand. So prone to failure when we see something like that. But nevertheless, I do think we saw that net buying. Breadth is terrible. Just remember that, and we're below the historic moving averages. We're still in a net down market. Just be aware of that. Don't think you should get out over your skis on the long side at all here. The Spx structure, I've updated the levels. You can see that we've got quite a bit of overhead above us. Below us, if we lose the 4257, that opens up the door here to 4200 and points south. So just be aware of the SPX. We're in this dangerous area. ES, kind of the same thing. We've got some overhead here to the downside. That 4200 opens the door, and in the ES it could actually be a little more severe. Overnight, the VIX started to come back up. We're back up at that 29, so call it open to close 2% estimation on the SPX. Very much within range. Do want to call out that today is one of the roll dates for Hedge Fund 2. 9,100 contracts of the SPX are getting rolled out. This is material. This is something that we need to pay attention to. Here are my best estimates going into the morning, where I think the new strike levels are going to be. Not as big as the 44,000 contract, the Fund 1, but certainly this is number 2. It's about $6 billion under management, and definitely worth paying attention to. What's important here is that when they put this trade on, they're going to put it on with a net deltas somewhere in that minus 57 to minus 60 on our side of the table, which will force the dealers to be long. Depending on how they handle this, they typically will buy a deep in the money set of call contracts to neutralize that. The delta on those will be close to 1, so they'll just buy a number of contracts to neutralize whatever this number is. Depending on when those expire, whether it's today or whether it's Monday, will depend on how the market makers have to go into the weekend. I don't think they'll carry it across the weekend. As we saw last month, there was a major mistake and we had a lot of downward pressure. We could see that same downward pressure into the close today, so just be aware of that. Looking at the SPX structure here today, it's a mess. There's nothing. You can see we don't have a lot of upside call structure. Downside is dominant. You can see where we are here at 42.87. We're in the middle of the transition. This is ugliness. Very, very, very hard to ascertain key directions here. If we do push above some of these levels, I've indicated some hiding spots where I think we could go to, but in general, this is a very messy, very, very hard structure to navigate, so I expect a lot of whipsawing. And when we're in the transition, just everyone, please be aware, there's not a lot of pressure up and down, so we could be moving around, the JPM stuff notwithstanding. Expiration still relatively weak, flat into next week into the FOMC. The monthly for May hasn't really changed. It's dropped just a little bit, but in general, no real directionality here. Nothing to read here. The 0 DTE, we're above the transition. This is the 4270. This is the JPM coming off today. Fairly large level there. Like I said, 9,100 contracts alone just at this level. You can see huge transition here. We're above it. I don't think we're going to push much higher than 43.25 into the close. If we do, we'll stall up in this area most likely. We certainly could drop lower. There's nothing preventing us from testing the 4,200 level here, so just be aware of that. And then taking a look at the AM and PM settled, which is a combo complex here. I've highlighted all these different delta levels. These are extremely large delta levels, by the way. Just be aware of that. Net negative expiry, we're in the transition zone, as I indicated before, on the expiration, or not expiration, I'm sorry, on the SPX structure. The key takeaway here is you can see the levels for yourself. I don't have to call those out individually. Study this. Make sure you look at these. Each one of these is going to become an area of liquidity, either to the upside. You can see there's not a lot of pressure to the upside. To the downside, certainly some battleground areas. When we take a look at the bullish potential, we are stabilizing horizontally, moving up. Play that as necessary, but I'm not overly optimistic. So just watch that today. If we are continuing to move long in the cumulative tick, you might want to take a look at some of the longer in the index ETFs. It's going to be really hard to justify going long in any individual stocks for a swing trade or a multi-day trade, especially into the weekend. Taking a look into the bearish side of things, we still think we're in a downtrend. The flow divergences are not supportive of moving up aggressively, so just watch that. And then this mishandling like last month, the mishandling of the JPM Fund 2 could set the dealers on their defensive side, and we could see them just moving down. So take a look at that. Watch that 42.57. If we lose that, you can probably play that down to a 4,200, and I've updated the levels here. So that's it for today. Come on into the Discord via this link right here, GammaEdge.us. That'll take you to a sign-up page. 14-day free trial, everything turned on. Would like to have you come on in and kick the tires. Gamma Edges on Twitter with the S. Please like us there and like what we post. And then, of course, here on YouTube, you can bookmark this. Note the little C that they threw in there. If you like today's content, hit that like button and subscribe so you can get notified next time we post something. So make it a great Friday, make it a great weekend, and we'll see you in the Discord. Thanks, everyone.